Hey guys, good afternoon today, not morning. I'm going to do the show in the afternoon today. I just got back from my run. Only ran a mile, so I shouldn't be too sweaty and gross. But yeah, got 2 mile run in yesterday. Hit my body beast build chest and tries this morning, and then got out for 1 mile tonight. Trying to get back in shape. So we'll see how that all transpires as we keep moving along. But that's not why you're here. You're here to talk about what's going on in the stock market. So let's take a look. All right. Well, we'll start with what's happened in the last 5 days. Let's go to the 5-day performance of the S&P 500 stocks. Actually, it's 1 week, 5 days, whatever you want to call it. So let's get the 1 week up here. Okay. In the last week, we got Google up 6%, Facebook up 4.8%. I want to take a look at Google real quick. So I did a write-up. Let's see if I can find it about Google, where I'm expecting Google to get to. My number is 1,020 by the end of the year. Actually, it'd be by January 31, 2018 is when a year from the date that I published. So that's kind of what I use is kind of an assessment thing. So I was expecting. Let's see if we can get that up here. There we go. So I'm expecting Google finish up around $1,020. So again, we got Google up, Amazon up about 4.5%, Netflix up 8%, McDonald's up 5.16%. I mean, in this last week, we've had some real strong movement in the stock market, primarily the techs. Healthcare's moved pretty well. Thermo Fisher's up almost 6%. Becton Dickinson up 5.25%. Regeneron up 6.5%. This is Alexion Pharmaceuticals, I believe, is up 10%. So a lot of strong movement. Anthem up 6.5%. Humana up 4.5%. So we've gone through a lot of high movers. So we got Facebook up 4.8%, and big thing is tomorrow is Facebook's quarterly reports. So that'll be important to take a look at. But before we can't just dismiss the stocks that are down. AT&T down 2.5%, Verizon down 2.5%. Credit services is very interesting. So you got PayPal up 7.4%, Capital One down 3.7%, Synchrony Financial down 17.5%, Discover down 7.5%. And there's a lot of big swings there, so that's telling me people are starting to look for the companies that are well managed and well placed to continue strong. As from everything I can tell, it looks like the market's probably going to overall, it's probably going to trend pretty much sideways here for a while. So now it's a stock pickers market. Now we're looking at, this is where the last 5 years of, I'll just buy the index and let it go, buy the index and let it go, it's performed really well because, well, the market as a whole performed pretty well. I think now we're getting to a spot where you're going to see that start to go away. You're going to start to see, stock pickers perform pretty well. Hedge funds probably will perform quite well here as we get into this situation where it's going to matter what you're buying. So with that, again, we'll go back to the reds or blacks, reds. Blacks are pretty much even. Reds are obviously down, but so the public financial REITs, the industrial space, public storage down 8.5%, extra space storage down 4.5%. So we're seeing some pain in the REITs. What else has been going on? Procter & Gamble down 2 3/4. Colgate down 2.5. Kimberly-Clark down 0.6. So that's pretty much flat. The auto parts stores. Interesting to see the auto parts stores down with a lot of the conversation that's been going around. Concern around as it's being dubbed, is the next bubble, is the auto loan bubble. We'll see if it comes to fruition, and it very well may. It may be a problem. It may not. But obviously, auto loans, if you've purchased a car any time in the last 10 years, or if you've purchased more than one car probably in the last 10 years, you'll have noticed that, excuse me, about 10 years ago, the maximum length of a loan you could get was 5, maybe 6 years. Now we've got at least 8 years that I've seen. I haven't seen more than 8, but my guess is they're out there. I bet you can get a loan for 10 years. So what's that say? Well, if you're getting a longer loan, means maybe there's still a lot more turnover in the auto sector. So maybe we'll see Ford and GM continue to do well, or at least decent, as people trade in their older cars and they're not interested in fixing them up. I don't know. Time will only tell on that. So interesting though to see them in the red. You see Kroger's back down at $29 a share. I think I'm going to be buying some this time. I like Kroger at $30. It just feel like it's a good stable company, and they've got a good strong dividend. And I like Kroger, and it's really them and Whole Foods right now as far as the two groceries, I guess, that are kind of really focused in on organic foods. So, all right, now let's see if I can find any of these write-ups on some of my past stocks. Actually, you know what? I know where I have one. Before we do that, so let's go ahead and take a look how the systems performed in the month of April. So the technical system, again, that's one that's just based on trading technicals, moving averages, price, strictly price driven. Doesn't look at anything else. It was up 0.04% versus the market that was up 0.91%. And when I say the market, that is the S&P 500. Let me see here if I can get this to add a sheet, or add a, I don't know why it won't let me add an extra line right now, but that's alright. We're not going to worry about it. So far this year, this is, let me see, so in the 4 months, it's at down 1.21%. It's at 98.79% versus the S&P up 6.49. So it's definitely not performed well so far this year. We'll see how it continues to do as the year goes on. Let's take a look at the undervalued system. So it was up 2.31% versus the S&P up 0.91%. So far this year, it's up 12.2% against the S&P at 6.49. And then here we'll go to the most stayed, tried, true, tested, whatever you want to call it. The system I've been trading for over 6 years now. We're 6.5, 7 years in. We're up 134% since we bought in, or since I started trading with this system. This last month it was up 2.99%. Versus again the S&P at 0.91, and so far this year, I'll give you the numbers. Maybe I won't. Doesn't look like I've updated this spreadsheet yet to give you the numbers for the year. So we'll get that in a different podcast or a different show here soon. Latest system I just started this year is my arbitrage system. So that was the whole idea behind that, is to look for companies that are going to be bought out. So if we can get a decent return within a year, try to take advantage of that. So we bought Monsanto with buyout price being about 15% above. We wait and see whether or not it's going to get approved by the regulators, but even if it doesn't, we've already collected a dividend. We're in, we're in a good position to. We got a tight stop on this one. So if things go wrong, we get out, we move on. We may take a little bit of a gain, we may take a little bit of a loss, but it's not going to kill us. So. Some other things that we started to do. So Marriott Vacations Worldwide, we've been in that just over a year. We bought in April 23rd of 2016 at $67.95. We've been collecting dividends along the way. So it's up 67% once you include dividends. What I've started to do with this system, or with all of my systems, so once I have a stock that is in a profitable position, that my stop loss is at a point that the trade's going to be profitable no matter what. At that point in time, I'm going to start moving the stop loss, start tightening up the stop loss, put us in a position, to really try to hold on to as much of the gains that we get. Are we going to possibly miss out on, a stock coming back? Say if the stop loss, so the stop loss in this system's a 33% trailing stop loss. So if we move it to, after a long time, say it would move to 15%, if it drops to a 15%, then we get out, we get stopped out, we collect whatever we've collected. Could it have gone down 23% and then turned around and went right back up and made new highs? Yeah, it can. But that's something we're willing to risk, because it's all about managing the risk in your trades, and that's what we're trying to accomplish. With that, I don't want to take this too much longer. I do want to see if I can find this spreadsheet real quick that's got my, it doesn't have the actual write-ups, but it has when I wrote about them, what I expected, etc. So we're a few months past. So one of them we gave to where the heck is it? Okay guys, so I can't find it here. That's not it. Oh my darn. I guess I'll have to look around, see if I can find it. But with that in mind, let me take a look anyways through some of my writings recently. Most of that was based around hockey, as the hockey season was coming to an end. So Apple, I wrote about Apple on February 7th. I love Apple. they're such a good company. Personally, was expecting, toward the end of, toward the end of January next year, my target price is $148. We're almost there. I wouldn't want to, at that point in time, I wasn't interested in purchasing. It was more just a write-up about the stock, to give you an idea of kind of some of the things that I think about when I'm looking at a stock. What I was looking at that time is I wanted to see it pull back about 5%. If it pulled back between 5 and 6%, down to like 125 bucks, I was going to buy. Obviously, I missed that one. It's gone up. It's gone straight up, and it is what it is. Another one that we wrote about, and we've been in this one for quite some time, is Aflac. I really wasn't. I'm really not expecting much from it this year. I could see somewhere around where it got up to earlier this week, around 60 or 75, 76%, $76. But you collect the dividend. We first wrote about this one almost 2 years ago now, and in that 2 years, it's paid dividends consistently. It's done, all you can ask. So, like I said, not something I want to buy right now with where it's at. I think it's pretty volatile there, but we'll leave it at that for today, guys. So there's quite a few things that we mentioned there. I'll quickly, again, Apple tomorrow, earnings before the market opens. Let's see, we've got, who else we got reporting tomorrow? Dish reported today, and it's down. Here we go. Apple, Pfizer, Merck, MasterCard, Philip Morris, BP, Gilead. So a lot of good stocks tomorrow. And then the day after, you've got Facebook, Kraft Heinz, Reynolds America, Time Warner, Novo Nordisk, AIG, MetLife. MetLife's one that we're in, so it'll be interesting. It's going to be one that we watch for sure. See how that impacts our portfolio. So, all right, guys, we went quite a bit longer than I intended, but I think we got good information in there. If you have specific stocks you want me to take a look at, research, write about, or just do some quick research and something that you want to see for on a tweet or something, tweet me at cmalik, send me an email, chrism@campfinancial.net. Otherwise, we will see you next time. Take care.